This S&P 500 weekly chart shows that an aggressive sequential sell countdown completion 13 printed last week for the week of the 3rd of December. And the sell risk level was given here at 4671.96. Price for this past week has exceeded it, and it is in no danger of becoming qualified for this upcoming week. And the S&P 500 weekly is on the combo sell countdown 11 and sequential countdown 10. And these sell risk levels mostly go back to the all-time intraday high era around the end of 21 and beginning of 22. And just by using the DeMark 13 indicators, you can see it was screaming to get out or lighten up severely back in the end of 2021. This aggressive sequential printed well before this sequential countdown 13 printed, and that could have been used in lieu of the 13 for sequential, and the indication gave you a second chance to get out over here when the sequential sell countdown complete 13 printed here. So since that period back here, there has been only sell setup completion end count 9s printed. There was one here, and maybe another one will print as the sell setup 7 for combo and sequential printed, and it would need to get below this level's close for a price flip to the buy setup count 1. If it doesn't, it prints the 8, and then in a couple of weeks, end of Friday, it needs to stay above this level, and then the 9 end count will print. And if all that comes to fruition, the TDST level, major support floor here, won't move up that much, as it will move to the true low of the beginning of the sequence here, so this close, and there's not much of a difference there, 103.98, and the close 4117.37, so we won't gain much by getting the 9 end count for sell setup up here if it does happen. And if the combo and sequential sell countdown 13s print before we start hitting some of these older risk levels, then they will add to this resistance. For right now, all of these risk levels can be considered resistance. And if the S&P 500 weekly chart turns around and heads south and prints the buy setup 9 end count instead of a sell setup 9 end count, then these will stop dead in their tracks and will not advance any further. And here was another clue to get out over here. I was pounding the table quite fiercely back here when this combo and sequential cluster sell countdown 13s printed here, and that was definitely a good warning. However, it did not print the buy setup 9 end count. I would have to look back to see. I believe it came close, but then was negated as it turned around and went back up. And they printed their respective risk levels here. You can see the sequential on the bottom and the combo on the top, and they've been running ever since up to the current day now. And here's the S&P 500 daily chart looking back to about July 21, and it has the two ranges. So this light blue one on the top is the upper range, and the one on the bottom is the bottom range, anchored at 3,800 at the bottom. And you can see the no man's land. We did get up into there, and then it just jumped straight out of there from a wonderful gap up here and then has gone parabolic all the way up to this horizontal line 4719.45, which during that time back here in 2022, the beginning of that and end of 21, was the top of the range until there was that parabolic move to the all-time intraday high here. So now that's the top of the range, 4790.15. Former one, 4719.45. I'll zoom in a little bit to here now. And that former range here, 4719.45, has proved to be important. You can look in the side window over here and see that a couple days ago it was support here as it went back down, and then this past week it was resistance. So that's an important area here, 4719.45. Former top of the range, and here's the top of the range now, 4795.50. And that segues into this chart, the cloud chart for the daily S&P 500, looking back to the all-time intraday high end of 21, beginning of 22, and you can see this rising wedge here. You can view the video about this. And then I noticed the similarities between this wedge here that I created and this one here, and was wondering if it was going to jump back into it here in this area, right where I have the arrow about. And it definitely did not do that, and the rest is history. So I was taking a second look at it from this run up here, beginning of November, end of October this year, and looked to reconfigure the wedge, and I found some nice spots right here, anchored in the same place as I had it before. For up in this area, we'll zoom in now and take a look. I believe back then I had it cutting through right here between these two big red candles, and it proved to be pretty good resistance right here. And that brings us to today, and I found a couple nice bottom anchors here at these low peaks of the candle wicks here, one here and one here, and I believe there's a pretty good right here for a spinning top candle. Let's zoom in a little more. So zoomed way in, it is these two candles here at their bottom wicks where it's anchored. There really wasn't much here. For this candle was a dragonfly candle here that came to rest right at this important level, former bottom of the range at 44.45 something. You can see it opened on it and went up on this candle, and then it was an important level here for that day, and then the rest is history. So we're anchored here at these two, which is a nice placement. And price jumped back up into it a couple days ago and closed in there with a spinning top candle here, and then closed underneath it on Friday. And that level to start the day on Monday, the 18th, is 4720.53. So there could be some resistance to get back up into it. And the similarities that I started back here with the top back at the beginning of 2022 is when it hit the top of the wedge, it came back down and then tried it again and then fell out. So this has yet to hit the top up here, and that would be around that 5,000 area that they're talking about, all the talking heads. So for now, I would call the bottom line of the rising wedge important. And again, it's at 4720.53.